So in today's M&A world, there is a fascination with value. And it's not new to be focused on value, but what is new would be the elements that are taking on a priority as value is being computed. And what I think would be meaningful is to share with you what some of the most prevalent items are in terms of determining the value of a CPA firm for merger and acquisition purposes. The first item that is going to be very much in the forefront is profitability. The more profitable the firm, the greater the value that will be determined. And profitability will be looked at from a variety of standpoints, not the least of which would be normalizing the activity of a firm that's going to be aligning upwards to affix to it certain transitional costs. So once those normalizations are done, profitability is arrived at, and the better the profitability, the more exciting the valuation. The next item that is very much in the factor is the client mix. What kind of clients do the firms share in terms of synergies? And the firm looking to align, what type of longevity do their clients have? What kind of fees do their clients paying them? And what kind of services are they getting currently? The next item that is very relevant would be niches and expertise. The more specialized the firm is, the greater the value that would be determined. And certain specialty areas or areas of expertise would bring more value in the eyes of the acquirer than others. So as you are looking at moving forward, not that you would re-engineer your firm for purposes of aligning upwards, but you would want to know where the value is attached given the nature of any expertise that you're bringing to the table. The next item, which correlates to the client mix and the niches, would be the upside potential. The firm that is going to be the successor is not going to do a transaction just to keep the existing metrics in place. The idea is to make more money for everybody. So where will those areas of upside come from? What new services, what kind of fees, and what kind of efficiencies could be at hand? This is a critical factor in the valuation process. A static practice, a practice that doesn't have much upside, that still might be very profitable, is not going to have the same type of appeal to a potential acquirer as one that has the upside to it. Merely focusing on expenses isn't going to be enough to show relevant upside. And finally, the issue that's provoking so many people to entertain M&A conversation would be people. What are the demographics of the firm that's looking to align? What kind of leadership skills do they bring? What kind of expertise do they have? This is extraordinarily relevant as the acquirer or successor, whichever term you want to use, determines the value. When all is said and done, value is in the eyes of the beholder. So these factors are relevant, but how they're weighted is very much a function of who the parties are.